What if I told you people can't afford the cars they've been purchasing? I don't think it would come as a surprise with how expensive cars are nowadays, but now we're starting to see the numbers trickle in for people defaulting on their auto loans at historic rates. The number of subprime borrowers missed car loan payments in October has become a new record tally. Guys, if you enjoy automotive news, make sure you're subscribed. I have big Nissan stuff coming. I have Toyota things coming. I have Korean car news coming down at the hatch as well. And if you see in the background, if you want to see more coverage on these two vehicles that I have this week, the Infiniti QX80 as well as the Toyota Crown sedan, make sure to stick around because those reviews are coming down the hatch. Now, before we sink our teeth into this, just keep in mind that I want you guys to stick around afterwards because what we're going to talk about is revisiting what we talked about yesterday and how the day's supply for cars on dealership lots is going up significantly. And I have more data that I want to sift through to give you more perspective. All right, people can't afford cars. What is going on? Subprime borrowing refers to lending to consumers with low credit scores. When I was working in the car industry, I didn't see a lot of subprime borrowers at a Lexus dealership, but you would see some time to time. And the finance department often had to work with Santander and other banks that specialize in lending money to people who have bad credit scores. Bad. Like I've seen guys, credit scores in the 400s, 500s. I didn't think that was a thing, but it's a thing out there. That's just a reality. People who also have low credit scores don't also make the best purchasing decisions and often can't afford the car that they're buying, obviously. And so what you see is these customers that can't afford these cars buy these cars at super high interest rates. It's the only way these lenders feel like they can get their money back is that they charge exorbitant amounts of interest. I think it's around 25% is the cutoff for usury. Okay, so they have to be under 25% interest rate on their loan. The thing is, it's like, man, 25%, you're going to be underwater the second you buy that car. Not only is a dealership marking it up, but you're going to make such little dents into the principal over time because the interest you're paying massively on. Anyways, that's just a small window into subprime borrowing. So PrimaLend, which serves the buy here, pay here auto financing market. I'm not familiar with them, but that would be, most of the used car lots, I would say, and probably like CarHop, things like that. Is CarHop still around? I don't know. Where dealers sell and directly finance vehicles for customers with poor or limited credit. They filed for bankruptcy last month, meaning their old business practices of charging people crazy amounts of interest to recoup their potential losses on defaults. The defaults have gotten so out of hand, they can't even make money on charging people 20% interest on auto loans. People just aren't paying their loans anymore. So we're seeing probably huge, record levels of repos on these defaulting customers. So PrimaLend is gone, bankrupt. Doesn't mean they're gone as a company. No, we see companies file for bankruptcy all the time and come back. Tricolor, which sold cars and provided auto loans mostly to low-income Hispanic communities in the southwestern United States, also filed for bankruptcy in September. A further deterioration in credit quality could weigh on lenders, especially at a time when investors are highly sensitive to signs of stress in loan portfolios. All right, here's a fun graph. Subprime borrowers fall behind on auto loans. These are at least 60 days past due. Okay, so loans that are over 2 months past due have risen to almost 7% in October, which is a record high for subprime borrowers. That is insane. The highest level never even reached 6% back in the late 90s, it looks like, maybe 96. And now, ladies and gentlemen, we are past 6% on average these past, if we look at probably the past year, okay, it doesn't break out by like year right here, but this is like probably end of 23 to 24. And as we finish up 25 here, it's an all-time record, beating out the previous couple of years here. So what's going on? Well, hey, this is just almost painting a picture of the rich getting richer and the poor getting poorer. Because look at the numbers. So back in the 90s, when you had a record level of subprime defaults, okay, you also had a record number of prime borrowing. People who had great credit. People who had great credit were also an all-time high default. But look at what happened past 2010. People who have good credit are past due less and less and less and less and less. Now, there's a small uptick since 2021, people with good credit, but it's still 0.3% people past due who have good credit. Okay. Meanwhile, the subprime has gone out of control in terms of past due, 60 days past due. This is crazy. The difference in default versus the rich and the poor here. Now, we had a small uptick right in the financial crisis of both the poor and the rich borrowing on cars, but not nearly the levels, but not the same levels we saw back in like the late 90s. And now we have this huge chasm in people being able to afford cars. The rich, the ones with great credit have no problem paying their cars. Okay, record level, almost record. If we look at 21, 22, almost record levels expectancy on people with good credit. And now we have record numbers of people with bad credit being past due. High borrowing costs, rising living expenses, shrinking wages, squeezing household budgets, leaving subprime borrowers increasingly vulnerable. Rising subprime auto delinquencies are emergency as a clear sign of mounting stress in the credit market, as many lower income Americans struggle to keep up with payments. All right, so that's mainly on the used car market. You do have some instances where subprime borrowers are buying new cars, but it's very rare. Very, very rare. Okay, but I wanted to paint a picture of the inventory situation a little bit further of what I did yesterday. I said cars were piling up on lots, and they are. Okay, if we look at when things were in all the cards were in the dealer's hands, the manufacturer's hands. When the chip supply hit, and even Nissan was turning a profit then, okay? In 2023, for example, in 2022. And you had no cars around. 50-day supply was the average, and you only had 1.5 million cars in stock throughout the United States. Car prices were a little bit lower then, about $3,000 lower than what they are now back in 2022. But this is when the dealers were seeing, on average, all-time levels of profit because they didn't need to discount their cars. There's no cars available, so they could just charge whatever they wanted. Interest levels were also still low then. All right, compared to what I would say now. So look at like the average day supply is just insane. Look at electric vehicles. The day supply then was low, but now it's through the roof due to, well, lots of different reasons, mainly the killing of the EV tax credit. But day supply was at 50. We fast forward to October of 2024, last year's October. Day supply crept up from 50 to 85, and the inventory doubled roughly from 1.5 million to 3 million. And the prices also went up about $2,000 in a couple of years. $2,000 here. This is the picture of last October. Here's the picture of this October. Inventory has gone down total inventory has gone down a little bit, but day supply has gone up even further, and the price of cars have gone up. What I have is I made a spreadsheet. I'll do my best to make it larger for you guys. Here we go. And this is going to be quite eye-opening. You see the numbers in red? This means the day supply for these automakers has gone up from last year to this year, and sometimes massive numbers like Chrysler. 53 days of increase of supply versus last year. And Chrysler, what do they even sell? A minivan? That's it. The minivan market's hot, but not their minivan, apparently. Okay, so their day supply went through the roof. But Toyota and Lexus seen really small increases in day supply. They are still 38 and 41, way below where the industry wants to be. Toyota and Lexus are still operating on a different level, even though their day supply has slightly gone up year over year. The average, or should I say the gold standard where the industry wants to be, is 60 days supply. Only Toyota and Lexus are well under that 60-day supply at this point. Last year, you had BMW, Honda, and even Chrysler, Porsche, Subaru, Kia. They were floating around that ideal 60-day supply. Some say upwards of 70 is the ideal supply to have, but 60 to 70-day supply is the goal. Now, even though if we look at the average only gone up 3. But I feel like that's misleading because you have some manufacturers that are just still way above where they would like to be, even though they've seen improvement. All right, look at Ford. Ford's still way up there in inventory, about double of where they want to be, but they have seen improvement year over year. Okay, Dodge has gone down 31 days supply. That's a huge win for them. But you could say, well, they hardly have any EV challengers on the market, or Chargers, I should say. Or is it, they don't make the Challenger anymore. It's only the Charger. And then you have like Jeep. Look at the Jeep. Jeep's day supply has skyrocketed. And this is a part of Ram's a portfolio as well, Dodge Ram. So Dodge day supply shrunk, Jeep skyrocketed, and Ram's is just crazy high. Volvo, I couldn't find data on, but I'm pretty sure they've gone up from last year. So I just kept them at the same, but I'm pretty sure they're up because I looked at Volvo in my area. They have almost 1,800 cars available. That's a ton of availability, with most of that XC90 and XC60. That's their bigger sellers, obviously. XC40 should be selling better, but the car is kind of getting old at this point. BMW, huge increase in days supply. Now, BMW still, right, like them and Lexus are neck and neck in terms of the sales crown, in terms of volume. But Lexus is they have to be smoking BMW in profitability, I would assume. I can't say that without a shadow of doubt. But when you have such a low day supply, Lexus dealers can charge kind of whatever they want for their cars. Not all of them, but definitely the ones that are in lowest supply. Same thing with Toyota dealers. BMW, still not that bad. They're still below the industry average, but this is not the direction they want to go. Honda's still holding on for dear life, still under 70-day supply, the only manufacturer under that 70-day mark besides Toyota and Lexus. Chrysler, like I mentioned. Porsche, huge jump up in day supply. Subaru, they're okay compared to most of the industry, but they're still trending in swelling lots. Kia, big jump, 22-day supply increase. Wowzers. Acura. This doesn't come as a surprise to me for Acura because they have no hybrids. Their product cadence is getting old. Not only their cadence, but they canceled the TLX. The only cars that are keeping them up right now, maybe the Integra and the ADX. RDX, MDX, or traditional volume sellers are in the tank this year, and they're seeing swelling inventory as a result. Land Rover, huge increase day supply. Mitsubishi, huge increase. Look at everyone below the average, or what was below the average last year. And a lot of them dipped way above the average. So now I've sorted based off of 2025 levels, and you can see the average right here. There's a lot less brands underneath the average now. Okay, Infiniti dipped below. Infiniti is one of these weird outliers where they have way less supply because they canceled QX50, they canceled Q50, they canceled QX55. So they canceled more than half of their product stack, and so their day supply swung in a more favorable direction for them. Chevy swung in the correct direction. They're now under the average days supply. But it's just fascinating. These numbers are going to keep growing for days supply. I don't see these numbers. There's a possibility we could see a dip in December, like I mentioned yesterday, due to like the December to remember all the Christmas specials, the end of the year specials. But after that, January, February, March are typically ice cold selling months, and we already have huge inventory. So I expect this inventory to get past on average 88 days. It's possible this year, depending on what the economy does, but it's very possible we could see a 90, 95, 100-day supply, which might be unprecedented, to be honest. Maybe back in 2009 or something, they had really crazy day supply, but at least in the more modern era, we're creeping towards dangerous levels of supply here. About 90-day supply, 50% higher than the ideal day supply on average. And most of these manufacturers are well over 100-day supply. Well, I wouldn't say most. It seems like half of them are about 100-day supply and greater. That is not good for profitability, okay, from the dealers nor the manufacturer. And look, car prices has gone up 700, almost $800 versus last October. And we still have high interest rates. That's not helping the situation either. But yeah, you're just seeing more people not being able to afford cars, but that's on the subprime end. The prime end are not defaulting. But here's the thing. I think more and more people, even if they have good credit, they're not buying new cars. They're holding on to their money because new cars are a terrible investment. I know that my business is talking about new cars and how great they are and how not great they are, depending on, the success of the manufacturer with that particular model. No one's going to say, hey, buy a new car because it's a great investment. And money people know new cars are not good investments, okay? You don't get a return on your investment like you did back in COVID when we had and the chip supply issue where you'd buy a car, people would flip them because there's no cars on the market. All right. That market I knew was going to be super short-lived. Now we have a market with a glut of volume and people are still not buying them at the levels the manufacturers need for profitability. What needs to change? Well, interest rates need to go down, car prices need to go down, or wages need to go up. Well, we know wages aren't really going up and we know cars are getting more expensive. Something needs to be done with car prices. You might be saying, Kirk, the manufacturers already struggled to make money and the cars cost 50 grand on average. I know, but if they want to have longevity, if we want to see a healthy car market going forward, we need more affordable cars. How does that happen? How do they do that? They got to figure it out, because I have a feeling as we go into 2026 here, people's sentiment for buying new cars is not what it was 3 years ago, where money was about free to borrow. Now money's very expensive to borrow. People can lose their job at any time, and no one wants to be stuck with a $50,000 depreciating asset that you owe a lot of money on. For new cars to make sense, in my opinion, we need $15,000 new cars, $25,000 new cars, and available at high levels, and not just dinky, small, fuel-efficient econo boxes. We need the average car prices to shrink massively. I'm not saying average car prices need to go from $50,000 to $30,000. That's not realistic. There needs to be something to change massively for these manufacturers to make more money. If that means doing things the more Tesla way, which Tesla, love them or hate them, most people hate them at this point. I don't care either way. They figured out ways to make manufacturing cheaper. The problem is with Tesla, batteries are really, really expensive. We don't have the supply chain that China has to make them dirt cheap. Okay. And that's why China has such cheap cars, because they have the entire supply chain there. And there's other reasons as well, like cheap labor. How they figure out to make cheaper cars, I don't know. Using more robots, that's probably going to happen. And we know that's going to happen. Reducing man hours and man labor is one way to save money and to reduce the price on cars, but that also reduces jobs. That weakens the economy. If it weakens the economy, less people are going to be able to afford cars. So it's always going to be this give and take, but affordable cars needs to happen. And there's just going to be a huge shock to the system in order for that to happen. People need to stop buying new cars that cost $50,000 and they can't, that they extend to 84 months or whatever. I make enough money to provide for my family of 7. I bought my first house this summer, but I bought one of the cheapest houses I could find within living conditions within the area I live in. I live in a very expensive area here in Southwest Florida. Okay, buying a new car, it's not even a consideration at this point. Not even we're just riding our Toyota Sienna, we're riding our old Toyota Prius, and they're great. They're easy. Okay, so there's no need for us to buy a new car other than wanting to have something shiny, something better with better fuel economy. But yes, I can get double the fuel economy in a new Sienna, but what does it cost? Well, my insurance is going to go up. My monthly payments going, well, I don't have any monthly payments. I paid off my cars. I can't just pay 50K in cash to pay off a car. Since I shared a little bit of my personal end, please share your personal end. Are you able to afford a new car? What needs to change in order for that to happen? Obviously, making more money would help, but that's easier said than done. The lower interest rates would help, but we don't see that having a big effect anytime soon, seemingly. And lower price of cars, we're seemingly never going to see that, all right, as much as I would like to. I got to shut it down. Who knows? We need some sort of switch to flip for the industry to make more affordable cars with new technology in order to do that. Streamlining manufacturing processes, working together. Nissan and Honda, for example, like they could work together. All these manufacturers need to work together to find ways to make their cars more affordable and to reduce costs. They've been stubborn so far. Very few automakers are willing to stick their necks out to collaborate with someone else for the betterment of the consumer. Anyways, I need to shut myself off. I've been rambling for a long time. I cannot wait to see you guys in the comments. Hopefully you have something positive to share. I know there's been a bit of a doom and gloom with people defaulting on their loans at unprecedented rates and car prices, not at all-time highs, but near all-time highs. It's within a few $100, and inventory at near all-time highs as well as people run out of money. Okay. Thank you. Have a great day, guys. Save your pennies. Don't buy a new car unless you're flush with cash, which good for you if you're flush with cash. All right. Good for you. Maybe we can attain your level of affluence in the future. Thank you, guys. Have a great day and peace.